Big tech is collapsing while smart money secretly rotates into this, June 24th, 2026. Today, the market hit everything at once. Tech, Bitcoin, gold, oil, bonds, everything. But here's the thing. 3 of 10 stocks in the S&P 500 actually finished green today. So what's really going on? I'm going to break this down fast because there's a rotation happening right now that most people are completely missing. Oil, the story everyone's watching wrong. Let's start with oil because oil is driving almost everything today. The WTI crude briefly touched below $70 a barrel intraday. That's significant. The Strait of Hormuz is reopening to shipping traffic. Vessels crossing are at a post-ceasefire high and still climbing. Iran war risk premium has now been fully priced out. Dated. Brent has erased all the risk added since the conflict started. But here's the nuance. This isn't because the geopolitical risk is gone. As one asset manager put it, prices are falling because the physical flow picture is improving faster than expected. Options markets are telling a different story. Heaviest. Put buying is concentrated in August and September at the $60–68 strike range. Trump actually commented today, saying oil broke $70, calling it a sign Iran is being very nice. Markets didn't celebrate bottom line. WTI near $70 may be a near-term floor, but options traders are positioning for $60 by September. The hidden rotation you need to see. The headline is, Nasdaq got destroyed today, biggest loser on the day, but Dow held green, small caps held green. Consumer discretionary and industrials were winners. The real story, Goldman Sachs' own TMT desk, flagged this morning that small caps, the Russell 2000, have outperformed the Nasdaq by 440 basis points over just the last 3 sessions. That's the biggest 3-day stretch of small cap outperformance since 2024, and YTD, the Russell 2000, is UP 21%. That's its best year since 2019. The Nasdaq is only up 17%. The R2K is outperforming the S&P 500 by 200 basis points year to date. If this holds, it's the biggest small cap outperformance year since 2003. Meanwhile, AI semis got absolutely crushed, down nearly 10% over just the last 2 days. The S&P 500, excluding AI, is actually up over 1% over that stretch. This is the broadening out trade in real time. Money is rotating out of the concentrated Mag 7 trade and into the rest of the market. Hedge funds are still buyers. Retail is driving volume, but long-only funds are net sellers of tech. This rotation isn't a one-day blip. The data suggests it's been building for weeks. Bitcoin and gold. The dollar is eating everything. The dollar index, DXY, just broke to its highest level in 13 months today. When the dollar surges, hard assets get crushed. And that's exactly what happened. Bitcoin got what the desk described as a triple-fisted hit today. Tech stocks sold off. Bitcoin tracks tech sentiment. The dollar surged, crushes crypto. MicroStrategy's perpetual bonds collapsed. Major crypto market pressure. Bitcoin fell back below $60,000, finding some support at early June lows. For now, gold is even more dramatic. Gold crashed below $4,000 for the first time since November 2025. A death cross is forming on the gold chart. That's when the 50-day moving average crosses below the 200-day, and it's a bearish technical signal traders watch closely. Gold is tracking rising rate hike expectations almost perfectly right now. The debasement trade, the idea that dollar weakness would keep pushing gold up, is unwinding fast. No, if you were in gold and Bitcoin as dollar hedges, today was a painful reminder that the dollar still rules. Rates, the one bright spot. 10-year Treasury yields fell 8 basis points today to 4.41%. The 30-year touched 4.85%, lowest since April 8th. This is actually good news under the surface. It means markets are pricing in disinflation, not recession. Goldman sees two forces pulling rates down: falling inflation expectations, oil prices dropping, and softening Fed rate hike odds. Goldman's Hatsius reaffirmed their baseline. No rate hikes expected, because lasting Middle East peace will likely create a more benign inflation environment than the Fed is currently projecting. Translation: long-end treasuries benefit. Dips stay supported. The bond market is quietly pricing a soft landing. What happens next? Tonight, Micron earnings. This is the big one. Micron is the bellwether for memory chips and AI hardware demand. If Micron disappoints, expect another leg down in AI semis tomorrow. If Micron beats, we could see a short covering rally in tech. Tomorrow, PCE inflation data, the Fed's preferred inflation gauge. Next week, non-farm payrolls on Thursday, with near zero liquidity expected around the holiday. Micron tonight may literally decide whether this is a brief tech correction or the start of a broader de-risking event. Micron is up in after-hours trading now. Call to action. Here's my takeaway: the market isn't crashing, it's rotating. And the rotation from big tech into small caps, industrials and consumer stocks may be the biggest trade of 2026. If Micron misses tonight, that rotation accelerates, but they didn't, so if it beats, you might get one last chance to position before the move gets crowded. But it did beat, so will the call wave take over? It's up almost $200 in after-hours trading. Today, drop a comment. Are you rotating into small caps, or are you waiting on the sidelines? I read every single one. Disclaimer: this video is for educational and informational purposes only. Nothing here constitutes financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions.